Hey, Luke, it is very good to see you. We have a really important topic today: 4 rules for investing after retirement. You know this really well. It's kind of a tough juggling act for retirees to balance protecting their income stream, making those safe investments, but not too safe that they run out of money. That's everybody's fear. So, we have some good tips. And we're going to start with number one, which is watch out for inflation, right? Because you and I have talked about this one before too. The consumer price index year over year jumped 7%. So, what do we need to keep in mind here?
Yeah, this is something that has obviously come kind of screaming at us here in the past couple
Right.
months. It's been a hot topic as far as the news is concerned and everything else, and it is ultra important. When you start to think about retirement, I think a lot of people think I'm going to get to retirement, I can get ultra conservative and just live out my days, living off of my nest egg. When in reality, for a lot of people, you may be retired for as long as you are working. You could work for 30 years and be retired for 30 years. So inflation early in retirement, like we're seeing now, it's really important to reassess where your budget is, reassess your spending habits, because everything that you've been spending on for the past 18 months beyond is now more expensive. So you kind of need to rethink the inflationary aspect of your income plan.
Okay. And now let's move on to number two here, which we're looking at. And that is forget the 60-40 rule. So, I've been hearing a lot of talk of bonds lately. What am I looking at here?
Yeah, in the same vein, I think the old school thought was always, as you get closer to retirement, to just increase your exposure to bonds or get more diversified by adding bonds. What we're seeing here on this chart is that in this type of market, when we're in a low interest rate environment, when stocks do poorly, bonds tend to kind of run with them. So
Hmm.
you're not getting that diversification between stocks and bonds, where when stocks are doing poorly, you can run to bonds in order to get some nice interest returns. The two actually tend to correlate in this type of market environment.
Okay. And something else that you brought up with me is considering annuities. And I feel like I've heard a love-hate relationship with them. What do I need to keep in mind when I am thinking about annuities?
For sure. Yeah. I think annuities, for a lot of people, the connotation is negative there, but in reality, they can be a nice asset in order to add some stability to your retirement plan. There are
Hmm.
annuities that do have guaranteed income riders where you can kind of set up your own personal pension, mailbox money, as we like to call it, and it's going to be there. And really, the explosion in the popularity of the fixed index annuity over the past couple of years, where you can get some of that upside return when the market is good, but you have that peace of mind of knowing when the market is doing poorly, the worst you can do is zero. So that's been, it's always nice to build annuities in as a piece of your retirement plan, not your full retirement plan, but that can offer you a nice conservative investment option in conjunction with your managed accounts.
Okay. And now the last point, number four here, consider real assets for diversification and maybe even inflation protection. So, what am I looking at here?
Yeah, so this would be, real estate would be one, or
Mm.
commodities and that sort of thing. And we're not necessarily saying that you need to run out and buy physical gold or silver, or you need to run out and actually buy up rental real estate property or anything like that. You can actually get exposure to these through REITs and other real estate funds within the confines of your IRA assets or Roth IRA assets, or managed accounts. So adding those in, a lot of times those have guaranteed dividends as well that are coming out on a yearly basis, and they tend to be a lot less volatile when the stock market is being extremely volatile.
Okay, that's good to know. Also, because Luke, to be honest, the last thing I want is to be a landlord.
Yeah, it's not for everybody.
No, it's not. All right, if somebody has some questions about these, what's the best way to reach you?
Of course, they can always go to www.eikenberryretirement.com. We've got a schedule an appointment with an advisor button right there on the homepage. They can schedule with myself or Nick. And as always, they can always reach us by phone, 937-498-1128. We look forward to, working through this. I will just add here quickly on the end, these
Mm.
first couple of years of retirement is, for a lot of people, has maybe come early. We've talked
Right.
before about
Mhm.
people taking early retirement through the whole COVID thing, the COVID pandemic. So it's a great time to assess, how do I not only set myself up to pay myself income now, but if I'm lucky enough to be retired for 25 or 30 years, how do I make sure my income is still stable then as well?
Such an important conversation. That's really helpful. Luke, thank you.
Thanks, Aaron.